This video goes out to all those future traders out there that are looking for an effective strategy to trade, no matter if it's let's say the E-mini S&P 500 or the micros, the NASDAQ 100 futures or the micros, or any, commodity or currency. When it comes to trading futures, I'm going to show you, that's an easy strategy. I talk about this, but I'm going to kind of add or show you some additional things that may pique your interest and help you out when looking for, high probability setups for one. What am I looking for? I'm not going to make this a long video because I've talked about the same strategy over and over, but I want to add or show you some additional things that you can actually do, because people always ask me the question, what's a good area to get out of the trade at? Okay. How many points should I be looking to pick up? How long or where should I allow the trade to go back up to or down to? So I'm going to show you a trade that I took yesterday evening. It was on the NASDAQ 100 futures. And first and foremost, before you get started, before you put funds into your personal account and start trading, or if you're trading, a funded account through a prop firm like Top Step or whatever your prop firm organization or company you're using, your funded account, you first and foremost want to be able to understand structure of the market, and that's understanding the movement. Are we making higher highs, higher lows, or trending in the opposite direction? It's all about the trend and the market trending, because of the fact is that supply and demand works best when it's pulling back. Yes, we're talking about retracements back to key areas of supply and demand. This is a beautiful setup on a demand setup off of a higher base chart. I always start with marking up a higher base zone first and then moving down to a lower base chart. That is what I like to call multi-chart confluence, because if there is a demand setup that unfolds on a higher base chart, okay, that's going to raise the probability of the trade going in my direction. Then when I move down to my lower base chart and I have basically a demand setup also, which is especially if it is inside the zone itself, okay, of the higher base chart zone, then and we get the break and close of the candle above, that's the rejection, the confirmation to go long, then more than likely the trade is going to work out. I'm always looking to fill some means of a gap or take a trade back up to some area of supply or demand. In this case here, let's say for example, market pulls back to an area of demand. You see all these gaps right here. These are fair value gaps in between. And yes, when the market pushes lower here, there's an actual area of supply resting above. Now, the market may not always go back up to the area of supply after rejecting an area of demand immediately. It can fill and stop at any particular fair value gap off of a higher base chart. That's why I always talk about trying to at least get that 20-point move on the NASDAQ. Or also people always ask, Mike, do you use a certain, are you looking for a certain risk to reward ratio? Meaning, am I looking for like a 1-to-1 or a 1-to-2 or 1-to-3, or whatever the case is? Well, you can also do that. I'm going to show you, if I'm looking for, say, 20 points on a move, I'm going to be looking for that once I'm into the trade off of my lower base chart. But I'm also using the higher base chart to gauge, okay? Now, you can use the risk to reward tool or feature, and you can mark up a 1-to-1. If you choose to try to get those type trades, I would definitely mark up and use it on the higher base chart and go in for my 1-to-1 off the higher base chart. Because when you're in the trade on the lower base chart, you want to be looking at where the market can potentially go, looking back at your higher base chart, okay? Now, when you're ready to start taking or entering the market, your first trade, I'm using NinjaTrader. Some of you may use Tradeovate. Some of you may use TradingView. Some of you may use Sierra Charts, multi-charts, whatever the platform is that you're using. Again, I'm using NinjaTrader, and so I'm going to be showing this off of this platform here on how I enter the market, and I'm using range-based charts, okay? So if you do, follow this process, I'm not saying that it's going to work 100% of the time, because there is no effective 100% strategy. No matter how much you look and how far or deep you dig, you're not going to find any holy grail to trading. Trading is all based on the sense of probability. Understand that, and understanding the probability. In this case here, it's all about confluence. The more confluence you have resting on your side, the higher the chance of the trade working out. When it comes to probability, it will work in your favor. So, taking your first trade, you've got everything. You educate yourself. You understand the concept, supply and demand. You understand market structure and being able to read price action. And now you're ready to take your first trade. Okay, so you have to have a strategy that's going to work and going to give you some means of confluence. And the more confluence you have, again, the market will work out, or the trade should work out in your favor. So in this case here, first and foremost, what I'm going to do is look to see which way are we moving. In a situation, if I'm looking to take a pullback on a key area of at a key area of demand. Well, I can see right here where the market was making higher highs and higher lows to the upside here. And then it pulls, if it's doing that, I can look to see, are there areas of demand resting below? Yeah, there's one here and there's one here. There's one way down here at the deeper end of this leg to the upside here. But this is a beautiful structure break right here to the upside, okay? Right here where the market pushed up, it pulled back. This was from Friday's close of the session. Okay. No, I'll take that back. Hold on a second. I'll take that back. Please forgive me when I said that. This was yesterday's. I'm sorry. This was during price action that took place yesterday. I didn't trade yesterday because it was a bank holiday and it was Labor Day, and I don't trade holidays even at early close. But look, the market did set up and have this structure break to the upside. This was a high right here. The market pulled back, okay? So it made swings to the downside, and these are what I like to call intermediate or minor areas of structure. When the market breaks higher, it's going to take out this high right here. It left behind this beautiful area of demand right here. Now, I would take this demand over this demand because there's more structure that's formed within this swing to the upside where we got this breaker structure above 19,634. So the likelihood of something transpiring when the market gets back to this zone is higher than this zone right here because there's more structure that was formed, and then the market broke structure to the upside, okay? Just like, let's say, for example, it broke structure to the upside here. It came back, and it did come back here, okay? But it took it a lot longer for it to come back here because this was into Friday's trading session, and then this was we had news approaching around 10 o'clock this morning, so I believe it was this morning we had news, and the market just kind of pushed lower. So don't trade around news, okay? Also, that's one thing to stay away from is economic news. This made better sense right here when the market came back here. Now, this was into the Asian session yesterday evening, but I saw it and I took my shot because of this being a beautiful breaker structure that formed yesterday's trading session on a pullback. And then I was aiming again for my 20-point move. Now, I marked the zone up, okay? Let me do this right here. This is the zone. Make sure I got it correctly. And then we're going to move down to the lower base chart. But what I did was that I marked up the zone, and when I marked it up, I using NinjaTrader the risk to reward tool. Now, I'm not always gauging my trades off of a one-to-one type thing, but people always ask me if I was looking to take a trade, do I use or could I use the risk to reward, or what risk to reward factor would I be using to take a trade from? Take a trade. I definitely would be trying to at least get a one-to-one, okay? And then you can hold potentials, meaning additional contracts, closing out majority, and then maybe allowing one contract to run. But always try to get at least a one-to-one if you're using, this type of tool, using a risk to reward ratio tool. Again, it can be found on NinjaTrader under the two option right here where it says risk to reward. But for me, normally when I'm into a trade, once I get the rejection off my lower base 24 range chart, I use my higher base 120 range, mark the higher base zone, beautiful supply area here. We got the breaker structure above, pull back. Then I'm moving down. I'm going to show you right now to the 24 range. But before I do, if for all those again that like to try to get or ask about one-to-one, one-to-two, looking for that risk to reward, you can use that too. And I just showed you where you can go up to here on NinjaTrader and grab it and then use it. So, for example, what a lot of people like to do is you could take it. This would say this is your rejection point here. And a lot of times people will wait for it. Like if this was the last bearish candle to the downside and we got the formation of this next bullish candle, the break of this candle above it, not meaning break and close because we're on a higher base chart, just meaning just a slight break above the last bullish up candle, because that's going to be when it starts moving away and you get the first closure of a candle above, a bullish candle, and then the next candle starts to form above that one, then that's kind of a sign of rejection to where the market may want to kind of continue pushing higher. But you also want to pay close attention to the lower base chart too, because I'm looking to see on the lower base chart if it's tapped into a demand zone and I'm getting a break and close of a candle above, because now then, okay, I get a break a slight break above this bullish candle here, not a break and close, but then I go to my lower base chart and I get a break and close of candles above, okay, when it tap into demand. I'm going to show you that here in a second. Then I'm going to be interested in going long. That's more confirmational from the lower base chart. So you can set up like right here, the top end of this bullish candle. Start the marking of the with the risk reward tool. Go down to the bottom, maybe where your stop will be at. This is marking a 1 to 2, so you can alter that or edit it by going here, double clicking on it, and then you can go to and just right here where it says ratio, type 1, because then I'm going to go from 1 to 1. So my 1 to 1 will be getting out around, what did it say here? 19,608, and you can see the market went right up to that area last night, all right, on a 1 to 1 entry. But basically, what I was looking at was, I like to, and I talked about this in the past, where I like to take my trades to. I know that the market can stop at any one of these fair value gaps. This is off of a higher base chart. You have to understand that when you start scaling down to a lower base chart, you're going to see more price action activity than right here. These are just all bullish, all bearish candles to the downside. So the market, once it rejects this area, okay, on the higher base chart, I'm going to be looking for it at least to come up for the first point up here at this first fair value gap area. That's where it can stop at. And you see what happened right here? It came up here to on the 1 to 1, okay, right at the fair value gap, and then went down, okay? But again, we're going to look at the lower base chart because I talk about multi-chart confluence. So you can use this tool to get into a 1 to 1 for those that are looking to take 1 to 1 type trade setups using NinjaTrader, or 1 to 2, or maybe even 1 to 3s, whatever the case is. Yeah, if the market could have kept going up, you probably had a 1 to 2 here, and then maybe a 1 to 3 up here. But again, the market can reject at any gap area or fair value gap area and then reverse. It's not always going to go up to a supply area or down to a demand area once you get the rejection. You have to trade based upon what you see is going on. And then again, if you see rejection where the market may get up to a fair value gap area, and then you see it on your lower base chart to where you're getting a close of a red candle to the downside, followed up maybe by a second candle, then get out the trade. Protect your trade, okay? So now we'll go down to the 24 range chart. I'll show you the actual trade and how it transpired. So this higher, or this bigger box, not higher, but this bigger box, that's that 120 range demand zone that I have marked up. Now, this is the pullback off that higher base chart where it came back and tapped into the zone. When it tapped back into the zone, if I see confirmation where there's another demand zone on the lower base chart, like right here, the 24 range chart, inside the higher base zone, which I do right here, I'm going to mark it up. And there was like a 1 or 2 tick gap right here at this demand zone. But still, it was a demand zone resting within the higher base zone. Okay. A lot of people probably say, well, let me, where's the gap at? Let me make this a little larger so you probably can see it. See that small little, maybe 1 or 2 tick gap there before it tapped the lower base zone on the 24 range chart? That's the gap I'm talking about in videos, meaning that that is a high probability zone because that's an area that hasn't been tapped yet, and so it's unmitigated. The market if it comes back to it, especially where we got confluence, a higher base demand zone and a lower base demand zone, the market more likely is going to reject at that area. And I talk about when you see this on a lower base chart, we're looking for the break and close of the candle above the last down bearish candle. When we get that right there around 54.5, take the trade. You can aim for your 20 points, okay? Or aim for that 1 to 1 on the higher base chart, but pay close attention to what's going on the higher base chart, because if there are significant areas or gaps above, the market can stop at any of those fair value gaps and reject once it taps it. As it did, it went right to the 1 to 1, hit that fair value gap area above, okay, and then went the opposite direction. But if you look on the lower base chart, if you got in here at 54.5, it went all the way up, and you definitely would have got your 20-point move right there real easy, because it went from, let's say you got in here at 54.5, it went all the way up here to 608.5. Okay, we're talking about 19,554, and then stop right here at the pretty much the value, the VWAP right here at 608, and then reverse to the downside. So that's way more than 20 points right there. If I'm not mistaken, let's see, where we're at 54. So that was like a 54 point move right there. Okay, All right, right there. You could definitely have picked up your 20 points fairly easy by doing that right there. And this is how you're going to increase your win ratio and win most times more than losing if you have a systematic strategy that works effectively and you're following your routine or following your plan, okay, on that strategy. But again, I'm showing you this on Ninja Trader. Again, for those that like to use the risk reward tool, you can use that as well. But I like to gauge it based upon what I see is resting above back at a zone. So if I'm on a higher base zone here, let me go back to the 120 range chart. This is a breaker structure, pullback, demand right here, beautiful area demand because we had aggressive buying right here, but we have aggressive selling to the downside right here that they have these gaps. Remember what I said in lots of videos. Once you get the projection and you see what's unfolding on a lower base chart and you're at an area of supply or demand, you got to pay attention to what's resting above or below you. If there's lots of gaps, the market can tap into any of those gapped areas and then reject. But try to aim for that first 20 points, especially on the NASDAQ. But it's really going to be boiled down to how far are you away from that most or the closest gap, resting above or below. So just pay attention to price action. I always talk about that. Pay attention to market structure. But this, again, for all those that are looking to place their first trade, this is a very good strategy to use. If you're a first-time viewer, just practice it and back test it, okay? Especially if you're using Ninja Trader. But this will help you increase your win rate and help you grow that account as well. But I appreciate everyone that tunes in on the daily and watches the videos. Thank you for doing so. If you're not a current subscriber, what are you waiting on? Go ahead and click on that subscribe button. Become a member here on the team, here on the channel. Make sure to turn your post notifications on by clicking that bell so you don't miss any other uploads. And for all those that are interested in becoming an elite member, again, the link is down below, all right? Right below, you'll see two links. You'll see the first one for the Discord for those that are interested in joining. The second one is for those that want to become or part of the elite membership, all right? And for a very inexpensive fee of only $6.99, that's where you're going to get the trade breakdowns, okay? Where I break down in detail trade setups that I post, over on our Discord community. I post them. Those are the setups that I go into detail about on the private community. For those that are supporting my efforts as a content creator, that's one of the perks and rewards I give back. So I break down those setups so you grasp a full-on understanding of why I took that trade. Where I was looking to get out the trade at, TP areas, stop loss areas, just the full-on in-depth thought process of what I was thinking into the trade, okay, and what led me to take that trade as well. But you also get the video playlist as well. You get that, and then I did a great video on market structure. But there are tons of trade breakdown videos on there that you can watch, and it's only for $6.99 a month. The link is down below. So make sure if you click on that link, make sure you choose the second tier for $6.99 and you'll gain direct access. But outside of that, that's all I have for you guys today. We have a couple more days this week to trade. I took this one setup last night. I haven't traded today so far because I've been kind of busy, but the market after news this morning has kind of been pushing to the downside, and I really haven't found a great area to really look for my next potential setup. But I normally trade to about 10:30, 11, and then I'm done. So I maybe just be done for today. We'll see. But outside of that, I appreciate everyone that tunes in again and watches the videos. And do me the biggest favor. If you found value in today's video content, please do me a favor and click on the subscribe button. I would truly appreciate it. Not subscribe button. I'm sorry. The like button. Click on the thumbs up button, the like button if you found value in today's video. I appreciate it. See everyone in the next one. Take care.